Was this a genius business move, stock manipulation, or an evil conspiracy? How did one announcement change the course of AI and generated billions of dollars for certain groups? I will uncover how a 20-year-old plan starts to unfold. Our main characters: a media conglomerate, an unknown VC firm, Sam Altman, and the shadows behind them. A lot happened during this AI week. From the latest developments of ChatGPT 4.0 to Google I/O, the tech world was buzzing. But what I'm about to reveal is even more intriguing. While many YouTubers were busy covering these events, a brief but significant announcement hit the AI market. OpenAI made a deal with Reddit.
We are thrilled to partner with Reddit to enhance ChatGPT with uniquely timely and relevant information, and to explore the possibilities to enrich the Reddit experience with AI-powered features.
At first glance, this made sense, especially considering the impressive new speech function of ChatGPT. But if you really want to know what's going on behind the scenes, always keep an eye on the stock market. Following the announcement, the stock surged more than 15% during Friday's trading. What does this tell us about the real impact of the deal? Let's revisit our numbers from the beginning and dig deeper into the story. How much did Sam Altman make from this deal? It's a simple question, yet difficult to answer. If we look at his gains within a few hours, it's straightforward: 16%. But when we compare it to the IPO price of $34, that's nearly a 100% increase within 2 months. And that's just the beginning. While reading some articles, I discovered that Altman already holds a combined 8.7% ownership. With a current market cap of roughly $10.8 billion, that equates to about $933 million. You heard right, nearly $1 billion. Of course, to avoid any kind of wrongdoing, quote, TechCrunch.
In an attempt to discourage scrutiny, OpenAI says in its press release that while Altman remains a Reddit shareholder, the partnership was led by OpenAI's COO, Brad Lightcap, and approved by OpenAI's independent board of directors.
Notably, Altman is on OpenAI's board, but recused himself from this decision. Do you believe that? So the question that popped into my head was, how and when did he acquire those shares? And why aren't the two founders, Alexis Ohanian and Steve Huffman, listed in the S-1 filing, which means holding more than 5% of a publicly traded company? Also, who owns Reddit? So many questions arise. Let's visualize what we know and what we don't. We know that Sam Altman is one of the key figures, but there are still 3 other parties involved. To get to the bottom of it, let's return to our question of how Altman acquired his stake in Reddit. After a brief search, my best friend Google told me that Altman was one of the initial investors with $50 million. But more interesting is how this round happened and why Sam Altman, a no-name in 2014-15, was the leading figure of this endeavor. I mean a no-name in today's terms. Altman's entrepreneurial career started with Loop-ET, a company which provided a service for smartphone users to share their locations selectively with other people. But if you take a closer look, the numbers don't add up. Altman raised close to $30 million in funding, and in 2012 the company was sold for $43.5 million. If you divide that amount among all investors and other expenses, there's no way that the young Stanford student made $50 million out of this deal. So what else could it be? Now, getting interesting, a bit into conspiracy territory. But bear with me, because I will try to be as analytical as possible. Back to our investigation. This leaves only one conclusion. Somewhere during this time, something significant must have happened. Paul Graham, an English-American computer scientist, writer, entrepreneur, and investor. Jessica Livingston, Vice President of Marketing at Adams Harkness Financial Group. And wife of founding partner, Paul Graham, Robert Tappan Morris, an American computer scientist and entrepreneur. And Trevor Blackwell, a Canadian-American computer programmer, engineer, entrepreneur, and roboticist based in England. Ever heard of them? No? Don't worry, neither did I. Anyway, they all crossed paths during their time at ViaWeb. It was an application to create online stores, later sold to Yahoo in 1998 for the equivalent of $50 million and got renamed to Yahoo Store. So basically, Shopify's 20-year older brother. Interesting, right? What else do this four have in common? They share the experience of the challenges of entrepreneurship in Silicon Valley and the struggle to raise capital. That's why they came together, to build a platform where young entrepreneurs and startups can learn from their experiences and strive for success. At least, that's their marketing strategy. Let's dive deeper into their operations. Their whole idea is manifested in a startup accelerator called Y Combinator, or YC. What makes this startup accelerator so unique compared to all the others out there? Well, the answer isn't clear, but based on the numbers, they seem to be successful in what they do and how they operate. But let me tell you, numbers can be easily manipulated, especially when it comes to startups and companies in general. There are countless schemes out there, which is why I don't trust any of them. Like a wise man said,
Never trust any statistics that you didn't forge yourself.
By the way, my background is in finance, so I know a thing or two about what I'm talking about. Anyway, enough about me. Let's get back to the topic. So this group of mentors essentially sells you the idea that if you're chosen by them, you have a higher chance of success. Don't believe me? Take a look at their website and the first thing they advertise. So let me give you a speed run what they do exactly. Y Combinator, YC, is a renowned startup accelerator founded in March 2005 based in Silicon Valley. YC runs a biannual program taking place in winter and summer, where selected startups receive seed funding, mentorship, and resources. The standard deal involves $500,000 in exchange for 7% equity. Throughout the program, startups benefit from guidance by experienced entrepreneurs and investors, culminating in a demo day where they present to a room full of potential investors. A key element of YC's success is its extensive network of alumni who offer ongoing support and advice through an active online community. YC's approach revolutionized the startup funding landscape by emphasizing mentorship and community alongside financial support. I delved into their financials and found some interesting numbers that weren't advertised. They have a two-part investment plan, 7% for $125,000, and additionally, an uncapped most favored nation, MFN, safe with the remaining $375,000. In a typical scenario where the startup raises subsequent saves at a $15 million post-money valuation cap, the MFN safe would convert into approximately 2.5% of the company. So, long story short, YC owns at least 10% ownership in all of the 5,000 companies, with a valuation of $600 billion. That's $60 billion. Now, let's not forget the cost of the initial startup investment, 5,000 times $500,000. That means they paid $2.5 billion to get $60 billion, a whopping 24 times the money they put in. Just to put it in perspective, with that total amount of $600 billion US, they would be in the top 15% of the global GDP, essentially ahead of Ireland. So if you want to be a part of the Silicon Valley success stories, there's no way around it, right? Companies like Stripe, Airbnb, Cruise, DoorDash, Coinbase, Instacart, Dropbox, Ginkgo Bioworks, and yes, even Reddit and Looped, his Sam Altman's first big success. But that's not all. I hope you enjoyed today's part 1 of 2. In the next episode, we will take a closer look on the other two parties involved in this Reddit mystery and what else happened. But here is a small teaser. Isn't it funny that Sam Altman and the Reddit founder Steve Huffman and Alex Ohanian were in the first YC round in 2004? So yeah, we have a lot to cover in the next video, so make sure to subscribe so you won't miss it. Finally, a big thanks to our sponsor, Salomon and Young. As As a holding company, they are dedicated to empowering the next generation of entrepreneurs by providing funding and resources to socially responsible startups. Their mission is to create a lasting impact on society and shape a better future for generations to come.